Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Taiwan index is down almost 1.4 to 1.5%. Hang Seng is trading with cuts of almost 1% as well.
We need to do whatever is in our limit, is in our capability to be able to do, which is to offer predictability, continuity, and stability of policy.
There's a big build-up around Iran, US build-up around Iran, and I think markets are nervous. So 71 on oil.
The third quarter just gone by, has been a defining quarter for Vedanta. Aluminium in our portfolio right now is our single largest business. And you're right, our cost of production is almost $1,684 per ton.
Nifty mid-cap is down about 1.25%. The small-cap index is coming up with a 1% cut as well. So across the board, it's lower.
Certain tweaks, especially around LTCG, is probably warranted.
Capital expenditure or the spending for economic growth kind of thing is one of the very important function of the finance minister.
So between 25,150 and 25,450 is where the market has been flitting around.
Promoters of Rosari Biotech are exploring options to sell stake in the company amid an early-stage interest from global private equity funds as well as a listed strategic player.
On account of anti-profiteering, etc., even the inflationary products price increases were actually pushed.
Government have loosened the purse strings for emergency procurement because of the immediate need to replenish the inventories of the three services.
It's going to be somebody that is very respected, somebody that's known to everybody in the financial world.
It's the last trading session before the budget on a Sunday. Remember, markets will be open on Sunday. The Nifty metal index is the one that's under significant pressure on the back of the metal meltdown that we've seen overnight.
Okay, we're off the lows, but we're also, of course, off the highs as well. It looked like it's going to go all the way into the green, but it's not. 95 points lower, 25,322. This is Closing Bell. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, Nigel. Nigel, hi. Afternoon.
Well, hi, Prashant. We have numbers that are flowing in thick and fast, and I think Ambuja Cements as well has come out with a set of numbers. On the top line, I think it's more or less in line with what we were working with. But on the margin front, I'm just waiting by to see what exactly is the performance out there. Remember, there's a bit of a regrouping even in the versus number. So we'll get those numbers up for you. Prima facie, it appears that on the margin front, it's come in at, it's actually a bit of a miss, actually, even on the margin front. So let me come back with those numbers. But for the time being, those numbers are going down a bit of a weak set. But I think the street was bracing, actually, for a weak set of numbers. My calculation is correct. I think its misestimates were a fair deal. It's come in at less than, I think, 1,360 crores approximately, which goes down as a miss, particularly when you have the top line more or less in line. We'll get further details out here.
Absolutely, and more on this a little later. But, it's one day before the budget, right? So, everyone says no expectations, low expectations. And as you get into the budget, closer and closer to the budget, I can tell you, a buzz with conviction, I guess some strongly held beliefs, some loosely held beliefs, but beliefs nevertheless that this will happen, that will happen, this tax change, that tax change. And that is very much the case still. Of course, no one knows what the union budget on Sunday will show, but that's the market for you, right? I mean, it's made up of views, it's made up of opinions, and, and many, many of them. So the market, of course, for now, off the lows, as I said, but it's still about 80, 85 points down. I mean, remember, it's not that the market is shut. Sunday, the market is open. The budget speech usually starts by around 11-ish. And goes on typically till about 1 o'clock or so. So there is, that 2 hours before the budget speech starts in that sense. So this is not the last session, in terms of pre-positioning or anything of that sort. Of course, on Sunday, there's not going to be any foreigners. Let's just quickly run you through what's coming up here on the program before I go any further. So, index and views from here in just a bit. The metal space entirely is down and out, right? We'll talk more about this. The IT counter is the other one which is feeling the heat. Strides Pharma is striking an upbeat note. I think it's up about 9%. third quarter numbers came through. And of course, we'll have a roundup on a quarter gone by. FMCG major Nestle reported numbers, and we'll talk about that. So that's the earnings deck, which is absolutely full in that sense. Expectations also, right, from Nalco and Steel Authority of India. And that's something which I think so much trading, so much interest in some of these metal names, with what's happening with global prices. How should you position yourself is the question. So let's get with Nagaraj Sethi, Senior Technical Research Analyst at HDFC Securities. Nagaraj, good to have you with us here. Thank you for joining us. What are you doing and what do you recommend more importantly?
Hi, good afternoon, Prashant. Yes, rightly said, market is showing some nervousness before the budget. The overall chart pattern, the way market has behaved over the last 3-4 sessions, looks like there is a strong buying emerging from near 25,000, 24,900 levels. And over the last couple of sessions, the market has recovered phenomenally from the lower levels on the intraday recovery. That itself is indicating the crucial resistance of around 25,400, 500 level is likely to be broken very soon. At least the union budget would be catalyst, and we could see on the budget or post after the budget that we could see market heading higher above the hurdles.
Okay, in terms of trades, Nagaraj?
Yeah, I have two stocks on the long side. One is United Spirits, McDowell. This stock price has been in a consolidation phase over the last few weeks, and on the chartically we found the inverted head and shoulder type of a pattern, which is a bullish reversal pattern, and the neckline of that pattern has broken above around 1350 levels, currently trading 1360 levels. Overall chart pattern is looking positive. One can look to buy at this point of time. Immediate upside target would be around 1440, and one can place a stop loss at 1320 levels. Second one is Unominda. Unominda has been in a consolidation phase. Today has broken out of the consolidation, moved sustained above 200-day EMA so far today, and it has bounced back from near the important weekly support. All positive technical aspects are indicating more upside from here onwards. Currently trading around 1179 levels. One can look to buy at this point of time. Immediate target would be around 1240, and one can place a stop loss at 1140.
Yeah, got that. Thanks very much for that, Nagaraj. Appreciate it, and we'll come back to you in a greater detail. You know, I want to now talk about the metals complex. The metals complex is down sharply, as you will see them come up on your screen. So look at what's happening with gold. Look at what's happening with silver, and look at what's happening with copper. Look at what's happening with aluminum. There is profit booking, right? Across most commodities, there is profit booking. Look at macro markets. Look at the dollar index. Dollar index, by the way, is higher about 0.5%. You have the US bond yields, which are ticking up in terms of futures, by the way. And you've got S&P 500 futures, which are down about 40 odd points or so. That's about 1%. Now, what is going on? And I'm linking this move in commodities on the downside and yields higher to President Trump's President Trump's nominee for the Fed chair, new Fed chief. And who is the new Fed chief most likely going to be? It's Kevin Warsh. It's likely. I mean, we'll hear from him. We'll hear from President Trump hopefully later tonight, right? So he's likely to make an announcement on his nominee for the next Fed chair tonight. And Kevin Warsh, a former Fed governor, Kevin Warsh, is the leading candidate right now. It was a two-horse race, and Kevin Warsh seems to have edged ahead. The reason I'm saying that is because there are two news headlines. One from Reuters, which says that Warsh met with Trump last night. And Bloomberg actually is reporting this morning that the Trump administration is said to be preparing Warsh for a Fed nomination. By the way, the betting market, Poly Market, the exchange, is giving a 95% chance that Kevin Warsh is going to be the nominee. So this is why we're saying Warsh is likely to be the next Fed chair, right? I mean, at least the Trump's nominee. Now, who is Kevin Warsh? Just quickly, he is the former Fed governor appointed by President Bush back in 2006. He's not as clearly a Trump insider, so as to speak, like a Kevin Hassett. But he's publicly supported Trump's sort of economic policy, and he wants the cost of borrowing for the US government to come down. That's very, very clear. Now let's come to why markets may be nervous with this appointment if it truly does take place. And I'll just run through a few of these things, right? What are his views, core beliefs, Kevin Warsh's views? So on 17th of November, he wrote an editorial and he said that Fed should reduce its balance sheet. That, I mean, the size of the balance sheet is too large, it should reduce it. His basic view is that real rates should be low and fiscal spending should be low as well. And it's something like what's happened with what the ECB has done in Europe. I mean, the views are kind of similar. He says he believes that inflation is not caused by easier monetary policy or strong growth, but by fiscal spending. He says Fed should not have a balance sheet. I mean, going back to the earlier point, and his view is that they should not interfere in markets at all. He's frequently argued for a regime change at the Fed, and he has said that the Fed has acted too far outside its mandate. The point is, he wants that benchmark rate to be lower, no doubt, but he does not want to use the Fed balance sheet. He thinks that's wrong. Actually, both candidates, that is Kevin Warsh and, of course, Rick Ryder, both believe that the rate of interest should be down. But the way to get to lower interest rates is very different. Warsh, who's apparently 95% chance now, believes that the Fed should not use its balance sheet. And this is a problem from a sort of, asset inflation point of view. I think it's well understood that money printing, the Fed stepping into markets to do this, do that over the last 12 years, actually last, 14, 15 years, has shown up in asset price inflation across the board. Commodities are not spared as well. And I think this is primarily the reason why, at least right now, if you look at international gold prices, international silver prices, you look at yields, etc., there is a bit of a pressure. So, the pressure is very much macro-ish related, and it's showing up ahead of the announcement. We'll see the actual announcement, and if this is indeed the case, but I think this is a useful primer ahead of that. I think we have Gurmeet Chadha, who's with us. Gurmeet, good to have you with us here. Thanks very much for joining us. There is, of course, what I described, but there is, of course, also very, very extended positioning. This year may belong to commodities, but it won't be in one straight line. There will be stop starts, price drawdowns, etc. So just your thoughts, Gurmeet.
No, Prashant, I think it's normal for it to be volatile, and it makes some sense to also keep taking some money off the table, especially if you get vertical moves like what we have seen in commodities, especially in Jan. If you remember in 2022, there was a similar euphoria around cobalt, lithium, the EV related plays and new energy related plays. And after a sharp run up, we saw 50-60% drop in some of those commodities because the end use also gets impacted. It's quite circular that way. So good idea would be to keep taking money off the table. Gold, I'm still okay in terms of from a long-term allocation point of view. I think other commodities, one has to be a little careful and be more tactical. Also, any risk of event, if something, for example, low probability, but let's say Iran issue gets resolved, maybe we have some more tariff issues get, slightly reduced, it can have a very sharp impact. Also, there's a lot of leverage. And typically, in a commodity boom and bust cycle, something goes belly up, which may not be visible right now. So just keep booking periodic profits and stick to asset allocation in our view. And I think the good thing for India is that we are going into a very important event, as you rightly said, with very low expectation. In fact, there's one line in the preface of the economic survey, and that line caught my attention yesterday. It says that the macroeconomic stability has not led to the similar reaction on currency and capital flows, and any investor caution towards committing to India needs examination. And I think that's the last line of the preface, right? So I'm a little hopeful that something would be done to address capital outflows. Which form, what format? Let's keep our fingers crossed.
Okay, all right. Hi, Gurmeet. We have the Ambuja Cements numbers that are up for our viewers on the screen. And, the street actually have been sniffing that it's going to be a weak set of numbers. The stock is way off the peak. Remember, we have the merger that's in works where they're going to be bringing all the assets under one header. That's Ambuja, Orient, Sanghi, all of them will get merged into Ambuja Cements. But these numbers look particularly weak. Top line, it's more or less in line. The volume growth actually is fair at around 17% growth. That's good, actually. But that's on expected lines. The EBITDA number, however, has missed, what the street was working with by a large margin. So you'll have to check out what happened. Realizations are weak, we know that. But whether or not there is any kind of one-off in the expenditure number as well. Power and fuel cost has gone up by close to 26%. Your freight and forward cost that's up close to around 16%. So that operating leverage really hasn't played out. And that's why the EBITDA per ton has come down to around 720 rupees. That's sharply low on a sequential basis, but the street was hoping for a bit of a bounce. Net, these numbers go down as a bit of a miss. And with the big boy Ultratech Cement actually delivering good numbers, commentary positive as well, the street would rather stick just to the big boy instead of going for the second biggest name, which is Adani Cement. Gurmeet, what do you make of these set of numbers? The stock, Ambuja Cements, actually, the street could actually choose to look ahead because the next quarter is going to be good. And valuation-wise, it's cooled off quite a bit. But your take on the space?
No, as you said, Nigel, it's a miss, and especially after Ultratech reported, a good set of numbers. Also, the commentary was very good. I remember your discussion also with the management, where there is a good chance of a double-digit growth finally coming in the entire building material space, led by cement, led by pickup, in the infrastructure activity, housing activity. So it's a bit of a miss. As you rightly said, we'll have to see what if there is any exceptional loss item. Also, last year there was another income aberration as well. So let the breakup come, I think, but clearly seems to be like that as this the screen is highlighting, EBITDA per ton is way lower than what the street was working for. So it's also I think the markets are very, very punishing when it comes to any subpar performance. Even average performance is not being spared. It's a mood like that. So I agree with you. Stick to larger ones, and there are some smaller ones also which are showing operational turnaround and are special situation play in terms of merger and acquisition that can be looked at.
And just take a look at that stock. It's now down close to around 4.5%. But the sector that's getting absolute hammering is commodities. That one's getting absolutely smacked right now. Vedanta is down big time. The numbers are very, very good. How much of it was already in the price? That was the big question. Hindustan Zinc as well has seen a sharp decline. We have seen this in the past. If this metal cycle is really in a bull run, then, we should see some kind of rebound in a couple of these names. But for the time being, they've made so much of money. These stocks effectively have given 40-50% in less than 2 months. So they're getting absolutely smacked. But let's turn our attention from the metals back to Strides. That's gaining in trade, posted its numbers today. The stock was buzzing higher. Ekta joins us to help us out with a quick analysis. Ekta?
Well, yes, Strides reported what was a good set of numbers, at least for some part of it. So the revenue was up around 4% year on year. We had the margins, which improved to almost 20% this quarter. So that was a positive on a year on year as well as sequential basis. It was an improvement. And the profit came in at a good 200 odd crores. Now, in terms of the geographies, the US was flat this quarter. So it was at around $70 million versus 73 million. Q on Q and year on year, and 9 months also it was up around 3% But the ex-US business did well, so it was up 20% on a year-on-year basis, which is basically their other regulated markets as well as their growth markets. And 9 months it was up around 16%. The access markets were, however, weak, down 70%, and 9 months also down around 53%. The street probably likes the fact that the company is reiterating its US business outlook of around $400 million by FY28. The company is saying that they've invested in new segments of controlled substances, nasal sprays, and 505(b)(2) as a part of their long-term strategy. And they have filed their first beyond generics product, which is basically a nasal spray with US FDA. That means less competition and higher margins. So maybe the street is more enthused about the prospects going forward.
Gurmeet, thanks very much for that. Gurmeet, any thoughts? Strides or anything else in the pharma space?
Yeah, so not in our portfolio, Vishal, but numbers look good. We have Laurus, Divi's, Newland Lab in the portfolio, and we have a bit of a Narayana Hridayalaya. So we are more positioned there, more on the CDMO side. There's been some profit taking from the peak and some consolidation, but we believe this is a very long-term opportunity. I think the pharma outsourcing industry, especially novel custom synthesis, will see huge opportunities picking up. And I think after this EU FTA also, pharma is one of the underappreciated beneficiaries in the medium term. So we are more positioned there. And happy to look at some of the generic names. There has been very healthy correction in the likes of, let's say, Mankind Pharma post the acquisition they have done, Cipla, etc. So we are overweight pharma. So on Nifty, let's say if you have 5%, we have about 11% in the portfolio.
Okay, all right. Gurmeet, what about a stock like ITC? The stock has become a little bit cheapish. I recall it went through a long phase of doing nothing because there was no trigger to buy the stock. But on bad news, it reacts to the bad set of news. Now, that stock is down, I think, close to around 15-18% just in the last 1 month post that duty hike. Any view on that name?
I think the news notification which came on first, along with GST, the sharp hike in the duty which happened resulted in a bit of an, more derating of the stock. I think once the budget is out of the way, there'll be some absolute clarity on overall tax incidence. I saw the management commentary yesterday, and I kind of agree. I think these kind of steps in the short run may boost a revenue or two here and there, but eventually leads to a lot of illicit trade. We've seen that with liquor as well, and there's already a lot of cigarettes from Southeast Asian nations and other finding their way. So it's it doesn't really serve the purpose. But these are thin stocks, and that's one risk you always run. I think the bigger trigger, Nigel, is the FMCG business. Reported very good set of numbers. See, this is a business which generates 25,000 crore free cash flows every year, and one of the most reasonable stocks on the index. So any and cigarettes saw volume growth. So we have to see how it progresses. There'll be a lot of front loading which happens, right? Because the duty comes into effect from 1st Feb. So this quarter numbers may actually surprise you. And once the clarity comes on budget, I think there could be some tactical bounce on the stock. Very, very reasonable at this price.
You mentioned since stocks, stocks like Allied Blenders have corrected from 700 rupees to 450 rupees. The stock I recall earlier today was down 2%. But that's seen a sharp spike up actually from the day's low. Any view on those sin names? Not talking about consumption, about a view on the stock.
No, Nigel. We don't have that in the portfolio. As I said, ITC is the only, if I were to use the word sin stock, we have in the portfolio.
Okay, Nestle is what we're going to focus on, right? Reported numbers. Mangalam is here with details. Mangalam, take it away.
There's a solid set that has come in from Nestle. In fact, for the second quarter in a row, the company has performed better than what the street has expected. In fact, much better than what the industry has reported as well. Last quarter, the industry showed low single-digit sort of growth. The company went ahead and did double-digit. This quarter, the street was expecting double-digit growth for Nestle. They've gone ahead and done 20% sort of growth. So overall revenue growth at 18.5%. EBITDA has grown 9%. One would argue that maybe the EBITDA has grown just in line with street expectations and not as fast as the revenue has grown. But to the company's defense, they've actually upped their ad spends by about 42% to pump prime growth. And that's something which, a lot of analysts would like as a strategy, largely given the sort of premium that Nestle trades at versus the industry at around 67, 68 times right now. So if you look at the numbers, 5,700 crores on the top line. The street was working with a number of 5,250 crores. So there's a massive beat out there. EBITDA at 1,200 crores. On the bottom line, there is a beat, but that's on account of an exceptional gain of almost 157 crores. The domestic business grew 18.5%. The exports, which is a smaller part of their business, grew over 22% as well. And more importantly, the company says this growth was led by broad-based volume growth. And a large part of that also came in from confectionery, which was an outperformer, where Kit Kat, Munch, etc. did extremely well, especially in the rural parts of the country, where the company was earlier under-indexed, and now they've increased their distribution and push in the rural areas as well. Coffee, milk, and Maggi continue to do well, so the stock will continue to trade at the premium valuations that it does.
No, absolutely. And I think stocks are doing well, 3.7% higher as we speak right now. Did you own this one, Gurmeet?
We have a certain exposure in a non-discretionary portfolio, Prashant, not across. We have Tata Consumer, which is one of our portfolios. That also apparently reported good numbers, but we saw a bit of profit taking there from around 1170, 80, 100 levels. So what the thing is that anything which, even if you see Marico, the food business has done well. So I think the branded food segment seems to be doing better than the BPC, personal care, hair care category. And if you see that getting reflected in the numbers as well. So we have Tata Consumer in our portfolio. Continue to, but as I said, nothing has happened in FMCG for last 4 or 5 years. So I'll not be surprised that in an environment like this, you might see some bit of an outperformance coming, considering that it's been a very large period of underperformance in most frontline names, including HUL or a Colgate or a Dabur for that matter.
Some good numbers actually at the bottom of the screen. Green panel, those numbers look quite good. I guess it's coming on a low base. But the EBITDA number is up at around 41 crores. That compares with around 17 crores. And the margins are almost in double digits. And that explains why that stock is bursting away. Sharp spike is what we're seeing. Net profit number as well. So good to see at least good numbers are being appreciated. And the street likes that. That's why that one is bursting away. Anything from this space, Gurmeet, that you like? Ply, panels, MDF, anything from here?
So we have, in building material space, we have Polycab, which has been with us for now almost since it's almost IPO days. Astral is something we are looking at. I think maybe after this quarter, with the PVC prices also now settling, and the bathroom fittings business also is now more than 100 crore business already. So they started selectively with few builders. Let's say doing one tower each, and now they are getting repeat orders in that space that can contribute over a period of time, and there can be good volume growth with the kind of capex that's done. It's not done too well of late, but that's another company we are tackling. So we are actually a little constructive on the entire building material space. There has been tad and a bit of underperformance. It includes cement, includes the cable and wire names, and includes some of the pipe names as well.
Gurmeet, leave it there. Speak to you post-budget. We're all working Sunday. It's a working Sunday. And speak to you. Thank you very much for joining us. We have Tushar Pradhan of Hexagon Partners join us on the other side. Stay tuned.
Welcome back. Well, we have Nalco's numbers that are flashing for you on the screen, and prima facie, I think it appears it is, more or less in line with what we were working with. So we should get some of those numbers up for you on the screen. Yeah, the profit number looks pretty much in line. Remember, for Nalco, what plays out is on the aluminum side of business, they'll do very, very well. On the alumina side of business, they'll take a bit of a knock because the problem is that alumina prices actually were weak. So we'll have to see what is the mix between the two. And, that's how you'll get the profitability out there. Remember, these stocks, they're not really reacting to their numbers. They're down because of the metal market sentiment today. The revenue number, as of now, as the number we have on the screen, that's looking much better. It's close to around a 5% beat on that front itself. And the EBITDA number is close to around 2% beat. So Nalco goes down as a beat. The street was sniffing a good set of numbers. I think the market capitalization itself of Nalco is already around 70,000 crores. So even if they're going at this run rate of even 10,000 crores per annum, it's already trading at around 7 times, which is not particularly cheap. So Nalco's the stock, a little under pressure. The numbers look pretty much in line with what we were working with. Tushar Pradhan, though, Director of Hexagon Partners, joins us on the show. Tushar, what's your take? Expecting something from the budget or expect nothing? What you get, you be thankful. Tell us your expectations.
No, I think from a macro perspective, what is most important to remember is that at the end of the day, we look at the budget and find out what the fiscal deficit is. And I think if you look at the revised estimate, that's a little weaker than the budget estimate. So for this year, we were expecting 4.4%. And at the revised estimate, it's come to about 4.8%. So I would think that that's a crucial thing to watch because everyone is expecting that maybe the borrowings is going to remain probably the same as last year. But I think if there's a shortfall in tax collections for this year, as is seen in the revised estimates, then I think there might be some revision there. However, at the same time, we are seeing very buoyant expectation of GDP growth, which means that tax revenues as a result of that should also be strong. I won't worry too much about the fiscal deficit number, even if the budgeted estimate is 4.5% versus the 4.4 for last year. I don't think there is any reason to get worried about it. I would really get worried if the capital expenditure in the budget comes a little lower than expectation. I think among the capital expenditure, the defense, and of course the industrial part of the expenditure, if it comes through, I think that's the bigger positive one should look at from the budget rather than probably anything else.
That's the second voice of today that's telling us that. Don't be so concerned about the fiscal deficit. Venugopal today as well, he said that he's okay with a little bit of a slip in the fiscal deficit, but the focus on capex, which is the multiplier effect, that's going to be important. That said, how are you feeling about the markets right now, Tushar? We've got quite a few earnings that have come in there. If I had to put a number, I think it'll be more than 50% of the earnings have already come in. Now, what are you making of the numbers that we have got? And how optimistic are you that this is the end of the poor earnings and now things start looking up?
I think that is the base case and I continue to stick to it. So far, the numbers that we've seen, I don't think there's been any significant surprise on the downside. There have been a fair number of beats. And as we see, the overall sentiment is really what is driving the market. In a euphoric environment where the market was, in a lot better mood, I think these numbers would have been taken very, very positive. But I think what's happened is since there is a lot of uncertainty globally, geopolitics is one part. And of course, within that, the India trade situation also is playing a very large part in terms of how to understand what's going forward. So the market appears to be conservatively positioned at this time. I don't think anything is going to change even if we do continue to get good earnings. So I think there's going to be a gap between the fundamentals and the sentiment. And it is very important for the sentiment to change. I think from that perspective, looking at what the budget is going to offer is probably going to be more important because sentiment is what will drive the market in the short run. And if we find that there are some tinkerings around the long-term capital gains, especially for FPIs, or if there is some kind of indication from the authorities that they would welcome more foreign exposure into Indian markets in some form or fashion, I think that's going to be a much bigger boost to the market than the earnings, because the earnings really play out in the valuations over the longer period. And I think I'm pretty yet confident that the earnings will come out. But whether that will move the market, that I'm not so sure, because that depends on the environment.
No, absolutely. 104 points lower, by the way. 25,317 is where we are at this point in time. By the way, look at what Idea is doing, right? 11.5% higher. Stocks at about 11 rupees or so, 11 rupees and 20 odd paise at this point. Lots of moves, and market breadth is positive. You look at advanced decline across on the NSE, and it's not a bad-looking screen. Garden Reach Shipbuilders, massive move. MTAR Tech, it's a 7% move, but it's not as if the defense index is doing anything fantastic. But you've got, some of these smaller names. Garden Reach, of course, not small anymore, but MTAR, yes, small, which are doing very, very well. So that's where we seem to be at this point. And of course, this entire correction in metals is the other thing. If you just flip and look at the other side, I think is metals, gold, silver, metals, which are down. At least I'm looking at volume-led losses. I think 10 out of the top 15 losses are all in that space at this point. Of course, this is international, as I described earlier, with what's happening in LME and elsewhere. Tushar, that defense thing, right? It's just that valuations are still very expensive. Order books are not small. Order books are 5 times, 6 times sales, and they may go up even for. I think we lost the line there with Tushar. Maybe we'll try and get him back, but for now, I don't think we have him with us. Why don't we take a quick commercial break here? We'll come back. Tushar perhaps is going to be with us. We'll also address D Street chatter with Nimsh, who's going to be in a bit with us in just a bit. As we slip into this break, hear out what Bernstein's Venugopal Garre told us about his expectations and a few more opinions right before the budget.
I do believe the defense should be probably higher than the 10% number, right? So 15% plus is ideally what should defense be in terms of the expenses. My view broadly is that defense is appearing as more a secular area, which means this is not a one-off expenditure growth. There is a room for this sort of an expense growth to continue for at least a couple of years. So in that sense, I would probably say that I'm a bit more positive on the defense pack in general. Certain tweaks, especially around LTCG, is probably warranted. It's not a very large quantum, especially the equity side of things. Probably government could have bans a couple of years down the line. So if you have more than 3-year hold or 4-year hold, maybe have the differential, taxes. I'm not expecting too much on consumption side of things. We've done a lot of things last year, and remember that GST impact of low collections will also be felt in this upcoming financial year as well.
I think the key question, though, in more seriousness is how they view fiscal prudence. Because this year, your tax collections have been far below target, and your expenditure still has to be cut fairly substantially in the next 4 months to meet your expenditure targets. So chances are you'll exceed your expenditure targets and you'll underplay your revenue targets. So the question is, will this government stick with its discipline on the fiscal side or not? And I think there are a lot of people, and I suspect I could be one of them, is maybe we shouldn't. right? We don't have to have this holy grail of fiscal discipline. If we are in an environment of uncertainty, maybe you loosen it up a little bit. Other economies have done that, so why can't we?
Okay, welcome back. D Street chatter, and chatter is, at a high fever pitch because budget is on Sunday. And as I said, Nimsh, general starting point, budget kya lagta hai? The answer is, well, low expectations, does not matter. But buzz going into the budget is always at a fever pitch. Strong convictions about what is in the budget and things like that. Of course, no, as I began the show by saying no one knows. But,
no one knows.
What's happening? What are desks saying?
Hi, Prashant. Today is more of a commodity day than an equity day. Lot of volatility in the underlying commodity assets like gold and silver, and that's showing up in the commodity stocks as well. The metal index is down 5%. Vedanta is locked at 10% down circuit, and so is a couple of metal names. And generally, there is a lot of fringiness and a left-out feeling in the commodity stocks in the last couple of days, and that's why you're seeing even a sharper reaction. So that's clearly playing out. There is a lot of fringiness, and now it looks like there is a bit of cool-off there. Having said that, today is going to be a high-volume day. I'm saying so because there is a larger participation from the FIs, and within that, at least a couple of large FI desks are having MOC sell basket. So last 30 minutes, you're going to see some impact on individual names. That's from a flow perspective. Surprisingly, the broader markets are outperforming. The mid-cap index, the small-cap index in the green, and the Nifty micro-cap index is up nearly 2%. So that's the kind of a day. Metals are down, large-cap some stocks are down, but there is a bit of momentum in the broader market names in today's trade. Private banks are well bid from the larger FI point of view. But again, technically, I've been saying this for a while now that 25,450 is going to act as a very strong resistance. Even today, we've reversed from those levels. So clearly, that's a level to watch on the upside. But today is going to be a high volume day with some sell basket as well at some large FI desk.
All right, Nimsh, I don't think it's such bad news, right? If these precious metals cool off and the other metals cool off, because people are getting so excited about that, they were ignoring equities. So maybe actually it's a blessing in disguise. Let's see how that goes. What about individual stocks? What are you picking up?
So the first stock on my list is Khadim India. There was a block a couple of days back as well. A bit of momentum is back in that particular stock. I understand some large HNI investors are active buyers as well. And a potential clean-out trade is on the cards, is the sense as far as Khadim is concerned. Maybe another 2% block is likely very soon, and that will be a clean-out trade. So that's something to track there. The second name is Suzlon. The stock has corrected within that entire pack of all those names. But at these levels, some bit of interest is back, and I understand one domestic mutual fund has been accumulating Suzlon at current level. So from a flow perspective. The third name is United Spirits. It's up 2% in today's market. But the sense is, from a flow perspective, there are multiple buyers, both domestic and FIs, who are actively looking for bids and blocks in United Spirits. So that's the reason that stock is buzzing in trade today. And the last is a couple of stocks where there is delivery-based selling. Bajaj Finance and Titan both stands out in terms of very high delivery-based selling today. So expect high volumes, but on the sell side in both Titan as well as in Bajaj Finance.
The other one, thanks for that, Nimsh. Idea is jumping up, right? Some out of the blue. Usually it moves around, used to move around court cases or some infusion or that kind of news flow. But anything you're hearing here?
Well, not only the price move, Prashant, even the volume surge has surprised a lot of people today. So there is a lot of buzz going the rounds as to who's bought in today's large volumes. Need to see if there are any disclosures from the promoted entities, because there is an anticipation that maybe the promoters would have done some creeping. We don't know that. There is no official communication yet. So need to see if there is any official communication. But the large volumes do speak that at least some larger HNIs or some large influential funds would have bought, if not the promoters, in today's large volume.
Okay, all right. And the disclosure, perhaps, I mean, if it is so the case, will come later today, and we'll track it. So maybe promoter activity here in terms of Vodafone Idea is what Nimsh is telling us, apart from, of course, the other stocks. Thanks very much for that. How do you position yourself in the last hour? Nagraj is back with us. Nagraj, what do you do?
Yes, Prashant, nothing has changed. Last half an hour, market is showing some nervousness, facing stiff resistance around 25,400, 450 levels. The overall chart pattern, short-term chart pattern remains strong, though market is showing some weakness from the higher levels. The way it has recovered from the lower levels in the last couple of sessions is indicating that there is a possibility of a decisive upside breakout of 24,400, 450 levels or 24,400 to 500 levels in the next 1 or 2 sessions. Sunday's budget is going to be a catalyst for the market. I'm expecting a market to move further from here onwards. The long strategy is going to be a prudent fall as of now.
So you believe markets headed towards the 20 DMA rather than the 200 DMA. Got that, Nagraj? But individual ideas are always exciting. Tell us what's on your radar.
Yeah, Nigel, I discussed a while ago the United Spirits and Minda. United Spirits chartically looking very attractive, showing a bullish reversal pattern like inverted head and shoulder. It has broken above the neckline as well. Currently trading around at the same price what I discussed 15-20 minutes back, around 1361 level. The target remains intact for around 1440 levels. Second one is Minda. Minda has moved up a little bit, showing some consolidation breakout from the lower levels. Sustained above 200-day EMA so far, currently trading around 1181. The upside target remains intact around 1240 levels for the stock price.
You spoke about United Spirits, and I don't know, it's definitely not the day to party on a Friday evening because we've got the budget on Sunday. But a lot of these liquor stocks actually are doing well, and some of them have seen a sharp correction. We have spoken about United Spirits, Allied Blenders. Even I'm looking at Radico, that delivered actually a good set of numbers. Volume growth was good, but the stock had knocked back closer on 20% from the top. And Radico as well is now up closer on 5%. A way of seeing cheers, looks like, after the kind of dropping that they have seen. But let's move on to an exclusive story that was broken earlier. We have sources are telling CNBC-TV18 the promoters of Rosari Biotech, they're looking to sell stake in the company. Rachna's the one who's picking up the scoop on that one. Rachna, take it away.
That's right. Sources have told us that promoters of Rosari Biotech are exploring options to sell stake in the company. This has attracted some early stage interest from global private equity funds as well as a listed strategic player. Now, discussions are still at an exploratory stage with no binding offers on the table yet and no final decision taken by the promoters. People familiar with the matter also say that the move is being driven by a lack of clearly articulated succession roadmap with no visible long-term plan on promoter transition disclosed so far. Now, Rosari Biotech, as we know it, is a major Indian specialty chemicals manufacturer with a strong presence across textiles, personal care and performance chemicals. In the third quarter, the company reported a revenue of about 581 crore with a net profit of about 33 crores. Compare that to the revenue that was 512 crore rupees and net profit of 31.70 crore in the corresponding quarter a year ago. That's about a 13% jump. But it's also worth noting that in late 2025, promoter Sunil Srinivasan Chari transferred 15.89% of his stake as a gift to family members and a family trust through an off-market interstate transfer. Now, that transaction did not dilute overall promoter holding, but it did restructure ownership within the promoter group. As of now, our sources emphasize that talks are non-binding and it remains to be seen whether the interest translates into a formal transaction. So we will keep an eye out.
Okay, well, thanks very much. It's an interesting story. Lots of companies, right, where the succession thing is playing out, or the lack of a succession plan, perhaps forcing promoters to perhaps look for other options, sell out, cash out, and things like that. Thanks very much once again. So 565. By the way, the stock went up 10% right after we put the story out. It's, of course, cooled off from there. Markets are doing what they are. Anand Tanan is with us, market expert. Anand, good to have you with us here. Thanks for joining us. Now, it has to be the budget, right? Anand, give us a one or two strongly or loosely held beliefs of what will happen in the budget on Sunday.
Wish I knew. I think, we can all have our wish list, but the reality is nobody knows. If you look at what the government has already done in terms of policy, including taxes, for example, increasing the taxes on tobacco, etc., much of the action is already over, right? They did GST before the budget some time back, and now the custom part of it doesn't matter too much simply because we already have trade agreements now that are likely to become more operational. There is not much excise. Therefore, the only thing left is capital gains and the signaling. So much of the budget speech I would expect would be dedicated to signaling the intent of the government as to where they'd like to see spend, etc. But in terms of real effect, the only effect that you can look at is on the capital gains. I don't expect anything on the private income tax. That again has been done last year.
You're saying
typically, if you leave it to the bureaucrats, they will find some way to tinker with it. I would expect some tinkering at worst. And so far, the government has done nothing to give you an idea that they particularly like investors. So if at all there is any tinkering, it won't be positive. But beyond that, I don't think there is much that will actually impact. So the budget will be more important from what it signals in terms of government intent and hopefully in terms of direction of spend.
That's a deadly line, Anand, there. the government is not giving an intent that they like investors. I mean,
look at it over
to be fair, markets have done well, right? You look at where the indices were and where they are now, and where, I mean, over a period of point to point, the last 1.5 years has been tough. But I mean, you go through phases, don't you?
No, of course. But I'm saying that, what has the market got, what has the government got to do with it? You go through phases. So hopefully the market reacts to earnings. Earnings have been somewhat subdued for the last few months. And therefore, whenever the earnings pick up, the market will also pick up. The reality is that, you started with a zero capital gains tax. You had an assumption that your STT would be the one that would take care of gains. Over time, not only have the gains come back, the STT has been retained, and the capital gains have been increased year on year over a period of time. Debt has been taxed at much higher levels. Indexation has been taken off. Which of these signals to you that the government is very fond of investors? And after this, we now have the Supreme Court stepping in and also looking at a question which has been asked in 2017. And therefore, there is a question now of what is the value of all the tax treaties that we have with various countries. To any foreign investor, I don't think India looks like something which has a very stable tax regime.
Okay, Anand, we'll just come back. I have to take a break. We could go on, by the way. We could debate this out, but maybe we will at some point, but not now, because 8 minutes to go for close. There is a big move in commodities, right? Look at gold, look at silver and MCX, and both are down sharply. We take a break. We're back. Anand is with us. We'll wrap out things as well.
Welcome back. Well, last 2-3 minutes before we wind up the trading session. Anand Tandon is still with us. Anand, I want to ask you, you have been right actually for the last many months. Every time I asked you how you feeling about the markets, you said, no, you don't believe that it's come to those levels. We have gone through a big time price correction and many stocks have seen a sharp price-wise correction. In this sort of a backdrop, do you believe that now there are a couple of stocks that you like? If you could name a few, or maybe a sector or a theme?
I still think we are in a relative performance market, and I think the sectors that are likely to do well will still be power, capital goods, and commodities, perhaps. I think this year you will find margins will actually come down compared to last year, which is something that the analysts are not forecasting. I think you will see a shrinkage of margins. You will see an increase in WPI. We cannot have the kind of increase that we have seen in commodity prices without that being able to affect the producer prices. So you have to actually go back to being commodities. And as I said, because of the fact that power is in short supply around the world, I would expect power-related, transmission-related companies will actually continue to have very robust earnings growth, and therefore you can ignore the valuations for a little while. Unfortunately, commodities is not great news for India, and therefore the best way to play it, especially energy stocks, not easy to play in India. Therefore, you might have to look overseas. But at least for the rest of it, we would look at commodities as one of the significant overweights in the current year, despite the rally that we've had. And we are talking about not necessarily gold and silver, and not even perhaps even metals. I think you'll be looking at even softer commodities doing well this year.
Got it. Okay. All right. Quick word, Anand, in terms of a couple of other names that are moving around. Some of these FMCG names, Nestle, Tata Consumer, not delivering anywhere close to the growth that they used to. And in comparison to their earlier multiples, they're trading either in line or a little bit lower. Some of these frontline FMCG names. Do you believe that it's time to look into them, or you believe there's not enough growth? Why should they even be getting these kind of multiples?
So if my thesis of soft commodity prices being higher is proves to be true, then you will find that these companies are not doing great anyway. However, as you mentioned, on a relative price basis, the fact that they have underperformed makes them at least brings them up on the filter. They haven't done well. They haven't done anything much. They have had the time correction. Therefore, you may be slightly overweight. Are you going to see a great volume increase? Unlikely. As I said, I would expect actually the margins in some of these companies to be under pressure in the next 12 months. And if that thesis comes through, then again there will be a question as to why you should expect them to move up. Which is why, as I said, I think engineering areas and power-related areas are my preferred sector rather than some of these defensives like FMC.
Got that. By the way, commodities, you think this is the year for commodities again? I mean, last year was the year for commodities. What about this one?
So I think that the rally is still there. I don't think that the dollar is becoming strong anytime soon. And that effectively means that commodities continue to remain weak. Now, that may change after a 6-month period or, even faster because the market moves very quickly these days. See, one of the major things is there is no impact yet in inflation, for example, in the US market, despite the tariffs. That is not logical. At the end of the day, if you are going to cut off supply from the places where supply is cheaper and put huge amounts of tariff, that has to be paid for by the US consumer. That hasn't happened yet. I even heard an interview the other day from someone who is distributing Eicher bikes in the US saying that the company is quote unquote eating the tariff. Now, I don't know if the company is eating the tariff or because they have managed to build an inventory there, but clearly the pass-through of prices hasn't happened. And when that happens, I think you will find that, inflation generally will have to move up. I don't see the reason for changing your overweight position on commodities anytime soon. And the soft commodities haven't moved so much yet.
Okay. All right, Anand, got that. Thanks a lot for joining in and giving us those views. So that was the day so far. We had the markets that ended down with a cut-off around 100 points. The broader markets actually did an outperformance. And here's why the reason why your portfolio is feeling good. Frontline names did see some selling, but number of stocks advancing, outweighing the number of stocks declining. You like that? The other positive was precious metals had become an all-too-easy trade. Suddenly you saw a bit of some profit taking being seen on industrial metals, on select precious metals as well. Gold did come in for profit taking, but the one that got hammered, that's obviously always more volatile, is silver. And that, the last time I checked, was down to less than $100 an ounce. Stocks that did well, it was the alcohol-related name, Allied Blenders, Radico, Tilak Nagar, all of them trading in the green. United Spirits as well, all of them putting on weight of around 2 to around 7% in today's trading session. What didn't do well? Commodities, Hindustan Zinc, Vedanta, Hindustan Copper, Nalco, all of them after seeing a big run. And Nalco, to be fair, the numbers were quite good as well. But that one came in for profit taking down close to around 10%. That's the way the cycle moves. Not a sector for the faint-hearted. Matrimony was another stock that was lower in trade. But net, we go into the budget session with the Nifty under some pressure. We're trading between the 20 as well as the 200 MA. Let's see which way we're going to swing. For the time being, we wrap up on this edition of Closing Bell. You don't go anywhere. Editor's Roundtable is next.